Hi, I'm John Tunison, CFO of Soluna. Today, together with our CEO, John Belizaire, I'd like to provide more information about the big news of our $25 million equity line of credit with Yorkville Advisors Global that we announced recently. We'll go through a lot of the details of this and the related changes that we announced. But before we do that, first I'd like to hand over to John so he can talk a little bit more about how we got to this point today and frame for you the overall elements of this financing and the positive impacts they're having on Soluna. And then I'll come back and walk you through the details. John, over to you.
Thanks, John. Hi, everyone. Thanks for tuning in. In order to fully understand the importance of today's announcements, it's important to understand where we have come from. In 21-22 timeframe, we were largely focused on proprietary Bitcoin mining via Project Edith, Marie, and Sophie. And by mid-2022, we experienced, as we all know, a crypto winter, introducing a myriad of challenges for us. Dorothy wasn't fully built at the time, and we were not yet focused on markets beyond Bitcoin like HPC and AI. So we financed the company with relatively higher cost of capital instruments. We drew down more on extensions of our convertible notes. We used a preferred Series B offering as a way to get us some much needed capital to help to grow and build out Dorothy. We, of course, had warrants and other types of expanded instruments with these. The essence is that these types of financings was rather complex, including all sorts of complex elements like repricing triggers, consent rights, etc. Now, as we moved into last year, we expanded on a major set of initiatives at Soluna. We evolved our business model to focus more on Bitcoin hosting, as you can see in our recent financial updates. We built and commissioned the first phase of our flagship project, D1A and D1B. So Dorothy is significantly ramped now. We've learned so much from that project. It has become the fundamental blueprint for us going forward. And we've continued to ramp up our pipeline last year to projects over 2 gigawatts. The outcome of all that work has been very positive. We completed significant project financings, as you saw with our partner Springland Capital and beyond. We were able to secure favorable but incremental improvements to our financing via amendments to our note holders. Those, of course, required more warrants and repricings, but it allowed us to essentially keep the process moving and continuing to make progress on our initiatives. Now, in 2024, this has been a pretty big year for us so far. We are expanding Project Dorothy. We announced the groundbreaking of Project Dorothy 2. We have launched a new subsidiary called Soluna Cloud. In fact, we've reorganized the company around 3 core subsidiaries: Soluna Energy, focusing on acquiring PPAs and land sites for data centers; Soluna Digital, which is holding all of our operating momentum around Bitcoin hosting and proprietary mining JVs; and of course, Soluna Cloud, which is focused on our AI cloud and co-location business through a partnership with HPE. We're working on new projects like Project Grace. That's a 2 megawatt facility near Project Dorothy that will be AI focused. It's going to be a pilot using our new innovative data center design called Helix. We have Project Ada, which is the name for our HPE cloud environment, which includes our initial cluster of AI chips that we're making available to the market through a host of partners and customers. We have Project Kadi, which is a 166 megawatt site in Texas, double the size almost of Dorothy, which allows us to significantly expand the footprint of the business. And that project is contemplated to have both AI and Bitcoin mining businesses in it. And then we announced Rosa this year, which is the further expansion of shovel-ready momentum in our pipeline. Rosa is 187 megawatts, and there's so much more behind that. We have more than 2 gigawatts in pipeline that is constantly growing, and as I often say, we unlock a certain number of that every year, and we target about 300 megawatts, so we're right on plan in 2024. So we've done most of our financing via project level investments. And as we do more of those and contemplate more, we've really reached a point where a structural look at our topco financing was both needed and achievable now, because we have clarity on the future of our business. We have a lot of growth opportunities, and that capital can be invested in those projects and be accretive. So that is where we are today, and why we're so excited about what we're doing at the parent company level and starting to get ourselves access to capital that can scale with us over time. Okay, so next I'd like to talk more about how the combination of the new financing and restructuring of our topco related financing structures is driving significant benefits now for Soluna. Okay, so John Tunison, my co-pilot, will walk through the details shortly, but the new financing from Yorkville is a $25 million standby equity purchase agreement. You might also refer to it as an equity line of credit, with draws on that equity line, if you will, or that SEPA, becoming possible once we meet the conditions, which include gaining effectiveness of the S1 registration. So we just met the major milestones, which included consent from our current debt and convertible note holders, some restructuring around some of our other financing partners. And the key point is that this will provide the company with additional reasonable cost of capital and cash to further fuel our growth going forward. Again, John's going to walk through the details here shortly, but as part of securing the consents to the Yorkville deal and to optimize our capital structure, we entered into various agreements or amendments with our existing investors, lenders, including the convertible note holders, to preferred Series B holder, and to some extent, as required, the Soluna Cloud note holders. So with these amendments and changes, what are the benefits to Soluna Holdings? First of all, it's going to help us simplify the capital structure at the company, which will make it easier for us to bring in new capital going forward. We will use this facility to strengthen the company's balance sheet to ensure that we have sufficient liquidity and capital to cover our expenses and also make critical investments and hire key staff. We will fund important Soluna Cloud operations and data center development activities that are underway in that company, and we have a lot of exciting news there. And then finally, it will enable us to deploy capital, equity capital, into projects such as Project Dorothy 2, Project Cotty, that will help to improve our overall equity cash flows. I think the key point is our business is capital intensive, but that capital, once deployed into these projects that we develop from our pipeline, which now have a diversified revenue base, can be very accretive to the company as we gain more and more portions of ownership of those projects through our investments. That cash flow joins the consolidated base of our business and increases the overall value of the company. And unlike other players in the space, we are organically creating that through the incredible development capability we've built, the relationships with IPPs, and the success with the work that we've done with Project Dorothy. We don't have to convince IPPs now that this will work. We can show them and demonstrate what we've done for their peers, and that is increasing our pipeline significantly. So I want to turn it over to John now to go through the details. Over to you, John.
Thanks, John. So now let me walk you through how the Yorkville SEPA, that's the Standby Equity Purchase Agreement, actually works. And then I'll move on to talk about our existing financing and some of the changes there. So again, this is a $25 million Standby Equity Purchase Agreement. Think of that as an equity line of credit, and we can do draws against that based on certain parameters. So the first step is to get effectiveness on an S1 registration statement, which you'll see we recently announced has been submitted to the SEC. So as soon as we get effectiveness on that statement, then we can start to use the SEPA, which we intend to do. And we'll do this based on a number of factors, and we'll be monitoring those factors on an ongoing basis. But it's things like, what are the company's cash needs at the moment? How's the market volume doing? And what are the pricing dynamics on our stock, among others? There are many other factors. And when we do these draws, there are some limitations, but to boil it down to the simplest level, the way the facility works is that we can draw up to the preceding 5 trading day VWAP. That's the volume weighted average price trading activity. So think of it this way. If we have 200,000 shares traded on average over those 5 days, then we would be able to do a 200,000 share draw. And we take then a pricing mechanism. And for those who would like to, you can read into the details of the docs, but there are 2 pricing mechanisms that we can choose. One of them uses a single day and sells at a 96% discount to that price. The other one looks at a 3-day forward average and sells at a 97% discount to that. Those are essentially the differences there. And so we can draw up to those 200,000 shares in that specific case, or we could do less than that. And again, I want to reiterate that one of the prime advantages of the SEPA, well, there's 2 really. One is we get to choose and can manage these draws when it makes sense for the company and when the market dynamics are correct for it. And 2, there are no consents, no warrants, and no other complicated financial elements to this financing, which is a significant improvement for us. If you're familiar with some of our previous financing documents from past announcements, you will probably know this, but just in case, several of our documents specifically related to convertible loan notes and our preferred B shares require consents in order to actually use the Yorkville SEPA. So as part of the process, we went to our existing lenders and investors and basically are restructuring certain aspects of their financings and did that in order to secure the consents. And I'll go into some more details for each of these, but at a high level, we'll see the convertible loan note holders either convert out or they'll get paid in cash over time with the proceeds from the SEPA. And we've done a number of things with our preferred B, such as repricing their conversion price, repricing some of their warrants and issuing some new warrants. And we've also removed or changed several of their forward rights, such as right of first refusal, participation rights, and consent rights and things like that. And we will be purchasing all 1.25 million of Soluna Cloud notes related to one of the convertible loan note holders, and we'll do that from the proceeds of the SEPA going forward as well. So to go in some more detail about what we've done with the convertible notes and what we've agreed with the holders of those notes is that we do expect up to the full outstanding principal balance of the notes to be either converted by the holders, or if not, we'll pay them via draws on the SEPA over time. And in anticipation of that, we prepaid 20% prepayment penalty, which comes via the existing terms of those docs, so that all of our cash prepayments will be made at face value going forward. Additionally, we paid a $750,000 consent fee at the closing, and this was to waive participation rights from certain holders and to offer consent for the Yorkville deal. Now, the existing warrants associated with those convertible loan notes, we haven't done anything with those. Those still exist. However, the holders have agreed to a standstill on any exercises of those until the earlier of either January 31st of next year or once the convertible loan notes are prepaid in full. And this is so that when we do draws on the SEPA and those shares go into the market, there's not an excess of shares in the market. And additionally, we're allocating a portion of the SEPA draws to pay one of the holders' Soluna Cloud notes to acquire those. No other rights or obligations will remain once these notes are paid off or converted, as you might expect. So at the end of the day, all of this gives us a clear pathway in relatively short order to full conversion or prepayment of the convertible loan notes, which will then significantly reduce the complexity of our capital structure, and it'll improve our financial flexibility and specifically in raising new financing in the future. And at the same time, it gives us full use of the SEPA. To go into some specifics around our preferred Series B shares, first, we repriced their conversion price down to $5 a share. We also repriced 60,000 existing warrants that were priced at different points down to penny warrants. And we will issue 140,000 new penny warrants to the Pref B holder. And in order to secure consent, we're issuing shares equal to 10% of the value of the Yorkville deal as and when we do SEPA draws. They'll essentially get that value alongside when we sell shares to Yorkville. We cleaned up a few things in the document. We fixed a drafting error to clarify the annual dividend payment, which is to be made annually. We removed several rights going forward, such as a right of first refusal and participation rights and consent rights. There are certain limited participation and consent rights, but for the most part, we've cleaned those up. They will get to consent, i.e. get that 10% that I already talked about on the remaining draws of the SEPA, and also on non-Yorkville raised equity, but not on up to $50 million of additional equity if we were to raise that from Yorkville. So that's a significant change to their rights of consent. So similar to the convertible loan notes, the impact of this is to give us a predictable pathway whereby the preferred B holder can convert out and convert their shares to common. We'll have a pathway to exercise their warrants, and it removes certain consent rights and other rights, which significantly simplifies and improves our financing capabilities going forward. And so we're really excited about that as well. Finally, as I've already alluded to, we'll be purchasing $1.25 million of existing cloud notes from one of the convertible loan note holders, specifically Alpha Capital and some entities related to them. We're purchasing this at a discount, so we're actually paying $750,000, and we're allocating 20% of our SEPA draws towards this until we build up that $750,000. What this does is it further supports cloud growth, and it allows Soluna to invest money into cloud on a secured basis because we will retain the security of those notes, which just further improves our optionality and likely equity ownership going forward in Soluna Cloud, and or gives us earlier access to cash flows out of cloud, which both are good advantages for Soluna. So now I'd like to hand it back over to John Belizaire, who's going to say a few words in summary. So over to you, John.
Thanks, John. That's a great summary. So people often ask me, what is Soluna's mission? How are you focused? What's driving the business? And I'd like to put it in context always with what's happening in the macroeconomy in the global world. There's a huge shift in investment in AI right now. And AI is hungry, it's thirsty, and it's dirty. It's a power-intensive computing operation. It has an unsustainable water use problem, carbon heavy, given where the data centers might be plugged in. But we, Soluna, are really stepping up to make a change to this environment. By combining renewables with generative AI computing, Soluna is really creating something new, renewable computing. You see, there are two problems in the world. Renewable energy has a wasted energy problem, and AI, in order to reach its full potential, needs a sustainable energy source. So this convergence, if you will, of technologies is a powerful driver of innovation that can provide sustainable and scalable AI. And that's the future for the business, and that is what Soluna is about. We call it renewable computing, allowing us to create something new. And this capital, this new capital structure that we're working on building and will continue to invest in, is focusing on giving the company the tools it will need to convert these assets, these very valuable power and land and IP assets, into revenue-generating facilities across a myriad set of locations through a whole host of new partnerships to help grow the business and build significant value over time. So I want to thank all of the shareholders who have been patient with us as we do this work, and all of the new shareholders that are investing in the future vision. Thanks for tuning in. We're excited about the future of Soluna Cloud, and the impact it will have on AI in the renewable energy sector. So for more information, please visit solunacloud.com. Also visit our main webpage at solunacomputing.com. You can follow us on the LinkedIn company page, Soluna Holdings. We're also on X, formerly known as Twitter. We're at Soluna Holdings to stay in the know on the latest developments from us. And finally, please visit the show notes for a link to our recent AMA, where we provide answers to some frequently asked questions about this deal and a host of other questions that our valuable shareholders send our way. If you haven't joined our newsletter, please do so. The link is in the show notes. And we send those out on a regular basis as well to make sure you're up to speed on the latest happenings at the company. Thanks again for joining us. Until next time. Thanks, John.